And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today, Wednesday, February 23rd, 2022. As always, thanks for trusting me with your time. Thanks for hanging out with Old Hogue for a little while here this morning. As always, we're seeking good context, good risk management, and thinking about patience in our trading. Always, if you're already in the markets, hopefully things are going your way. We've got a few things going on here this morning and some interesting changes and opportunities. As always, markets are always going to be challenging. As far as economic numbers this morning are concerned, there is nothing really major. We do have one talking Fed and a 5-year note auction at noon. That's about it. Don't forget tomorrow, though, there is a long list of economic numbers, and we will be anticipating those numbers throughout the day today. We have the GDP, and we have jobless claims tomorrow, as well as crude oil and nat gas and a couple other things. Markets are still very headline sensitive. A lot of uncertainties out there. We know that. Make sure you protect yourself. Always wear a stop. As far as what traders are focusing on this morning, U.S. stocks are set to open higher this morning, with the S&P teetering right around that 10% correction level. We all know that the Nasdaq is between the 15 and the 20% pullback level. Sanctions on Russia are being viewed as measured, probably leaving many wondering if we are doing enough. Crude prices have retreated off 7-year highs as sanctions on Russia have not yet had an impact on Russian oil exports, I should say. Long list of earnings this morning as well as this afternoon. Nothing major, just a long list to look at. As always, make sure you hit the lucky like button, share, question, comment, feedback, and heckling and love are always welcome here at the Market Forecast and the Market Recap. And again, thanks for getting us to 15,000 subscribers on YouTube. The VIX this morning down 3.5%, 2780. A little bit of fear coming out of the markets. Dollar index 95.91, down slightly off its settlement from yesterday. And the 10-year pretty much right where it was, the yield on the 10-year, I should say, pretty much right where it was at 1.96%. I got to tell you, everybody be cool. Hide the beer. My mom's watching. This I know. She made it to the opening today. Good morning, Mom, and good morning to everyone. I got to see who's first. Zorain first in the room. Zorain, you win the prize this morning. But fond good morning to Brian, Carol, Theo, Mirik, Manuel, Vince, Janus, Denny, Ronald, Terry, Frederico, Spencer. Markets seem a little calmer this morning. Yeah, a little bit calmer. Bill, good morning. Jeff, Isaac, Luis, Denise, Alfred, Charles, Deanna, good morning. No sightings of any coyotes this morning, Deanna. I'm keeping an eye out, so maybe I can get a picture I can share with everybody. There's 3 of them that we see hanging around, and we hear them hooting and hollering all night long. We don't get to see them that much, and we are certainly trying to keep them separated from our lovely dog Lacey. But we learned a lot about that thanks to you, Deanna. Devant, good morning. Yes, S&P is a little bit more uppy. It is an industry term. We got a lot of those around here. Gabo, good morning. Laura, Andre, Jay, good morning. Bongiorno amici. Italian? Sarah, good dawn to you as well. Jeff Mullins, Expediter. Dean, Rusty Golfer. Tachyon Amplifier, good morning. Brett Shaw, good morning. Alessandro. Brody, morning from Olympic Peninsula. Sarah Hall, good morning. Dan Marcelo. Dan Trader, good morning. Mom Hoagland, everybody's saying good morning, Mom. All right, Robert, Jason Cargill, and Dan Trader, Mom. That's all right. Jerry is awake, and I'm hoping I am too. Group coaching today, 1 o'clock Central Time. I just put the link in so you can register and join us at 1 o'clock. I do have a favor to ask from a few of you. I'll ask during the session who wants to volunteer. I want to check the function of Zoom. I'm going to see if a couple of you would mind just speaking up so I can see how that function works, because as I mentioned yesterday and on the forecast and the recap, we got something coming up that I hope that you're going to really like. We're going to try this out for a few weeks and see if this works, but you're going to have the opportunity to make Hoag money, and I'm looking forward to it. Do I like the sounds of the coyotes? Some do, some don't. They're very yippy. They sound kind of like dogs, but kind of like jackals. My wife does not like the sound of them. They scare her. I like the sound of them. We can hear them all night long back there behind our house on the other side of the fence. Hopefully, it's probably a 20-year-old rickety old cedar fence, and it's probably not that stable, so we're a little concerned about that, but we're going to be shoring that up as soon as the weather breaks for us a little bit here. But I don't mind it. You know, I like knowing that there's hoodoos out there, and hoping that they're doing well and surviving. Speaking of surviving, we're going to be taking a look at the charts here and seeing what we're looking at. Anything else? Any other business? I don't think so. I think we're in pretty good shape. We're getting pretty close to the crude oil open, so we're going to jump into the charts and see what we see. Let me get things all set up. We're going to start as usual now with the daily in the E-mini S&Ps. Hello, Dean. Hello, Rob T. Good morning to everybody. Okay, let's take a look. So, the daily on the S&Ps, we're back to a settlement price. We're going to see that on the 30-minute chart. But as we mentioned on the recap, it's exactly 4,300, right on a big round number. Good morning, Casey. So we've got downside structure in the medium to short time frame. We're putting in lower highs, lower lows. When we look at this, we see the last time we were down here in October, we had excess below these lows. We have excess at this low also. It appears as though the market has perhaps gotten a little bit too short. Monday and yesterday's session added 45,000 contracts in open interest. So that's this day on the downside and yesterday on the reversal below weekly kickoff low that occurred yesterday. Is the market doing a good job continuing its move to the downside? I think there's a lot of question. I mentioned yesterday, we have an answer. Yes, Russia is moving to at least, take part of Ukraine. And we've started some sanctions. Again, some thinking that they're not good enough or big enough. Again, we're hanging here at the 10% correction level. This is the continuation chart. So this 43.27 is at 10%. And that's really where we are right now. I mean, we're just kind of hanging at that level, looking for new information. Back to the daily. So the market seems to be holding its own. It's chilling. It's uppy. And that is, again, an industry term. It's waiting for the next shoe to drop. I can just hear the traders out there and investors going, okay, what's next? What's going to happen next? Is there going to be is it going to be a war, or what's going to happen with rates? All of those things still out there in the universe, wondering what's going to happen. Well, we just have to make sure and be aware that these things are out there. Be aware that the market can respond violently to any headline news that occurs. We just have to make sure that we are well aware of that. Here's the 30-minute chart. Here's the settlement price from Friday, which goes all the way through the open yesterday. We've got settlement now, again, 4,300, right on that big fat round number. What are we looking at? Well, we had a move down below weekly kickoff low. We had a move back to it, and on that 230 bar that went right to it and then found support. So we've been holding support. We've been rejecting. We rejected the night before last, before the open. We tested back down through that level and rejected. Now we're holding some overnight longs in this market. My question is now going to be, do we take yesterday's area of value and Monday's area of value high here, and do we accept below it, and do we unravel the overnight inventory that is mostly to the long side? Or do we reject it? Do we bring in buyers up here, and do we continue the move to the upside? The opening range might be an interesting opportunity today for us. I'm probably not going to be playing it because we're pretty close to value. We're inside range. I'll be looking for better trade locations as the day goes on. And again, anything we do, we've got to trade what we see. We've got to use the information that we have in hand at the time to develop those hypotheses and just trade those hypotheses with the proper strategy. At any time, things can change. Keep your eyes and ears open. And as another reminder, please use stops. Protect yourself. Always use a stop. So we're looking at the opening in range above value. If we reject value, we may see this market on its uppy feeling right now. Almost like that scene in Finding Nemo when they're in the deep ocean and they see that little light and they start feeling good about it until they realize it's a fish that's about to eat them, and they both say, "Oh, good feeling gone," and that's what can happen. So be aware, be ready, be protected. Let's take a look at crude oil. Be opening here in just under 2 minutes. Okay. Yesterday was expiration. There's still some open interest left in the March contract that's going to settle either in cash or in delivery. But overall, we lost 8,000 in open interest yesterday. But in the March contract, we lost 26,000. So overall, outside the March contract, we added 18,000 contracts off of the high here. Now, when we think about the markets, we're always thinking about what direction are they attempting to go and how good of a job are they doing getting there. We see balance, we see balance, we see balance, and we see a lot more balance here. So this upside move is showing signs of getting tired. It's getting old. It's saying that if there's no real big new information, that it's primed for a pullback or at the very least an area of consolidation. And I'm looking at this right now thinking this is developing into a pretty decent area of consolidation. The pullback or consolidation can even inventories and allow traders to push the price even higher or push price even lower, depending on direction, of course. The upside auction does remain intact, but it is showing signs of struggling. Technically, volume, open interest, there's the signs that are saying we've come a little too far, too fast. We need to either consolidate or pull back a little bit. It's going to take new participants to continue this move to the upside. new participants, new money coming into the long side for this market to go in that direction. Okay. The 30-minute chart here, let's take a quick look, and then we'll see how the opening range plays out for us. But I'm not playing the opening range today. Why? We're in range. We are in value. Overnight inventory, because we are here back at settlement. Overnight inventory really started about here, but we're not very far from there. There's no real overnight inventory for us to use for an early opportunity. And the fact that we're opening in range and in value and right at settlement says very little change in the perception of value. And again, that can change at any moment. There's no gap. We're in short time frame control here. Be patient. Look for better trade locations as the day goes on. The opening range has just finished. For those of you that are familiar with the opening range, it's the range for the first minute of trade. So we've got an opening range 76 up to 91. So we're looking at, what are we looking at here? We're looking at 15 ticks. 76, 86, 91. 15 ticks is the opening range. We've taken a look above it already. But remember, we're right back at settlement. So if we're going to be taking this opening range, we're going to be looking at about 18 to 20 ticks of risk. If there is potential for the upside, you want to make sure that that potential is much greater than that 15, 20 ticks of risk. We're seeing a pretty decent push above this. But again, because the market has opened in range and in value, I think that there is a much smaller probability of the opening range remaining the extreme or the low of the session, because again, we're in range and in value. The market is in balance. It's more likely to start to create a range in here. So I'm going to wait until after maybe the first hour of trade, until the initial balance has established itself, and use the extremes of the initial balance to look for my opportunities. Don't want to do anything in the middle here. I mean, we're trading yesterday's point of control. That is the warm, fuzzy middle that makes everybody comfortable. It's where a lot of trade occurred yesterday. A lot of trade may occur today. And I don't want to trade where there's a lot. I want to trade where there's not a lot of time and not a lot of opportunity to get into those trades, to find out whether I'm right quickly or whether I'm wrong cheaply. Yes, Spence, you're right. It may most likely we'll trade both sides of it, unless there's something that has changed. We've got a big opening range in the gold that I'm looking forward to showing you. So opening range is paying us, at least for now. Here's that 1 minute chart again. Opening range. We're at 1-to-1 risk right now. We get another push to the upside, we may get a 2-to-1 opportunity out of this. But again, in the 30-minute chart, opening in range and in value, likely better trade locations as the day goes on. Let's take a look at the Nasdaq now. Nasdaq, it's almost the same situation as the S&Ps, but not. Look at where we are. We are between the 15% correction and the 20% correction level. In the S&Ps, we're wrestling with the 10% correction level. So this market has been representing as weaker, and we can see that when we go back to here. This is the area that the S&Ps are currently working with and against, and we've already kind of gone through those areas of excess, and we're creating new areas of excess at a lower level. The market is still, saying a lot the same things that we had we're having a kind of a slower rejection of previous excess. We have a previous excess here, unable to get back to those levels, testing back to it. Weekly kickoff low yesterday. Actually, the weekly kickoff low was the dead ass low in the regular trading hour session yesterday, before this market started to turn around and recover a lot of those losses. What's the next headline du jour? That's what we're waiting for. We are also, don't forget, waiting for the GDP numbers tomorrow, as well as a bunch of other economic numbers. So all of these uncertainties weighing on the market, but keeping us just kind of on our toes here. Markets tend to get a little bit too short. We got too short down here. Are we too short down here? Are we going to see a decent pullback off these lows? Take a look at the 30-minute chart. Here's the settlement price. 13,862.75 is settlement. We have overnight longs. Are we going to open in range and in value? Are we going to open outside value? Are we going to reaccept value from yesterday? Are we going to reject value from yesterday? Anything is possible, and it's got to expect anything. But again, we got to trade what we see. We've got some overnight inventory. If we can't push this market above the overnight high, that may be enough to have our overnight longs, which are shorter, weaker hands, shorter time frame, weaker hands traders, push price back down to settlement, which would give us a better opportunity to look for a long if that's what we were thinking about doing. It's not necessarily a bad idea, but of course, we need to be using levels that we can depend on to establish a point of invalidation. If we open and we take price back down to settlement, we get down to value low from yesterday, that might be one of those levels where we can limit our risk. Yesterday on this move back down to the weekly kickoff low, here's the night before last overnight, we opened back above the level. We came back to the level. It was supportive. Let's see here. We got 13,710.75. So within about 5 points of it, and certainly close enough to be in the zone, especially for the Nasdaq. So trade what you see, expect anything, and make sure you are limiting your risk. Volatility hits, that risk is going to jump through the roof. Also will so with the opportunities. You're excited to see what's going on in gold here. So test of the weekly kickoff high yesterday brings profit taking. Or did we bring in new business to the sell side? Those weekly kickoff levels are intended to show possible areas where longer time frame traders will adjust inventory. We actually added 10,000 in open interest on that push from the weekly kickoff high, which indicates potentially new sellers. We've been seeing negative delta. That's why I left this delta up here. We've been seeing delta divergence since we started seeing open interest increasing in this market on this move to the upside. Delta is the number of contracts that trade on the offer is positive delta. They're buyers buying against sitting orders, minus orders or minus contracts that are traded on the bid, which is negative delta. So when you see delta negative, you would think our more aggressive traders are using market orders to hit bids. Shouldn't that push the market lower? It should, unless there's something else going on. I usually say that there's a snake in the woodpile when we have a delta divergence, because there's things going on behind the scenes that we can't necessarily see that might be indicating that longer, stronger buyers are just placing bids and moving those bids up and placing bids and moving those bids up and placing bids and moving those bids up, because it's the short time frame market order hitting traders that are hitting those bids, decreasing delta as price moves higher with higher volume and higher open interest. This is a healthy move. This is a healthy move. It's getting tired up here. We're starting to range. We're starting to show a consolidation area where we're seeing long shadows. We got a doji here. We got, some very small candle bodies. Yesterday, not so much, but today we're sitting here in a small candle bodied bar that tells us the market is looking for new information. It's consolidating, it's evening inventory, and it's getting ready for its next move, be that move to the upside or to the downside. Here's the 30 minutes. So there's some structure down below that could certainly go. We could certainly go and recheck. But when we look at what we've got going on here, we got 1, 2, 3, fourth day in this area of balance up here, where we've been kind of waiting, looking for new information, adjusting inventory, evening inventory. Okay, that evening of inventory is going to make it easier for buyers to come back into this market and push us up above that weekly kickoff high, or for sellers to take over and come back and come back and recheck some of the weaker structure that we have down below us. I feel like I'm talking really fast, but I'm very excited about this. I'm very excited to see how this whole thing plays out. Now, we opened below range, well, actually in range, but below value. The opening range in gold this morning is 58 ticks. 58 ticks. The low of it is 1899.70. That was hard to say. The high of it is 1905.50. That is a huge opening range. It is something that that the market looked above, but if I'm going to take that long above this opening range, my risk is going to be 60 ticks, and I'm not taking that kind of risk. I'm not, I'm a pea shooter like anybody. So what my opportunity is to see the market come back into the opening range, offer a much better trade location for a long inside the opening range to see if the market can turn around and continue the move to the upside. Now, not only is the opening range the low of the session, the opening tick at 720 is the dead ass low of the opening range. So buyers right at 720 came into this market and barreled into the upside. Whether those buyers are overnight shorts, entirely possible, or if it's new money coming in and pushing this market higher, either one. But that first minute of 58 ticks was absolutely bonkers. Couldn't get into it fast enough, and I don't want to buy it up here. I'd rather get a pullback to buy it at a level. Hey, how about value low from yesterday? That looks like it was a pretty good spot here to catch this right down here. But if the market does continue to move higher, we don't know how far this thing could go. I'm looking forward to a real, true, regular trading hour test of weekly kickoff high. We checked it in the overnight. I was probably sitting down eating dinner when this happened. It was on the open night before last. Had an opportunity here when I was probably sleeping up at that level again. Now we just have to wait and see if we get another opportunity for it. Opening range, huge. It's going to take new business or the consolidation that is currently happening for us to bring buyers back into this market or bring sellers into the marketplace. All right. Now, to kill that enthusiasm, we have the euro. Still range bound, still short time frame control. Whiffs of change in the wind. We had a pretty decent increase in open interest yesterday and Monday. Remember that open interest is the abbreviated session on Monday and yesterday. We added 3,500. We're inside extended trading hour range in the day time frame. Market is range bound. What are we looking at? Well, we had some overnight shorts. We had some overnight longs. We don't really have any overnight anything right now. The market really just kind of hanging around in the range that is somewhat random. I'm going to be back burnering this market again today. Yesterday, I thought was, I was watching it. I was like, this is just it's a nightmare. It's anybody that was looking to extend range extensions, which happened, 1, 2, 3, 4, 5 times yesterday. Anytime you went for a range extension and went with it yesterday, you just got smushed. If you were playing for range bound, it was tough to get to those levels and tough to take those trades because there wasn't a lot to lean on. I mean, overnight, the value low from the previous day. What are we looking at today? We're in range. We're in value. We're overnight high. It looks like a potential opportunity for us to look for a short. It's the kind of upper end of the range we've been in for the past 3 days. Overnight low, maybe. Just not seeing anything great. as much as I would like to be excited about that market, it's just not exciting, at least to me. The 10-year back to the center of the range after a test of weekly kickoff high yesterday. New shorts have been coming in off that high. We added 29,000 contracts in open interest yesterday and the day before. We got to remember that's 2 days basically of activity. There wasn't much activity on Monday, of course, but we did see some new shorts come in, and we are trading lower now. Here's the 30. You got to get the right chart up here. Here's the 10-year. What did we do? We have a head and shoulders. Does the market head that direction? We are coming from a upward move. We are now looking at a potential head and shoulders on the 30-minute chart. If we were to break out below the neckline, which is right here, this naked point of control here, I'm looking at as the neckline, the measurement from the top of the head to the neckline takes us to weekly kickoff low. I'm going to probably be looking for opportunities to sell strength in this market. And of course, anything can and will happen. We got to keep our ears and eyes open to the headline news. But it's going to be interesting, at the very least, as a study, to see if this head and shoulders plays out to its measurement, which is down here, back down to weekly kickoff low. And now, finally, let's get to the nat gas. It's still in rollover. That may have a lot to do with how range-bound this market has become. With everything going on, we know nat gas is going to be in short supply in the world here, possibly very soon. Maybe not here in the U.S., but open interest, there's an increase off that weekly kickoff high from yesterday. We added 9,600. That's a pretty substantial increase in open interest. And that is, of course, over 2 sessions, Monday and Tuesday. One settlement day between the two of them. So it looks like we may have brought in some new shorts here. But again, open interest and volume makes it difficult because of rollover. It's a little bit blurry. Take a look at the 30. We'll see if there's opportunity here. Okay, so here's our Monday attempt at above weekly kickoff high. We did not settle there. Settlement remained from Friday. We rejected. We were range bound, basically inside value from Friday. We're still in that area. What did we put here? We have an island top now. We gapped up to Monday. We gapped away from Monday. It's an island top. What do we just leave down below? We left an island bottom. There was a gap to this and then a gap away. This island bottom put us to where we are now. Now, again, we have an island top. The regular trading hour range gapped higher, put in a high, and gapped lower. Interesting, isn't it? What does it mean for us today? Overnight inventory is very fresh to the upside. We're still in range and value. So it tells me I got to try and stay patient. If I'm looking to close this gap, or if I'm looking for a test of weekly kickoff high, I want to buy it on when it's exhibiting weakness near a point of invalidation, near a good stop level. So I got to stay patient. I got to wait. I got to sit and see if the market comes to me. Because if I go looking for trades, pretty sure I'm going to find some. And they may not be the ones I really want. Lots of conversation going on here. Guys are talking, helping each other out here, it looks like. Yeah, the consolidation during rollover, sometimes after that happens, we can be free to run. I'm just going to kind of go through some of this. And the crowd enthusiastically chanted, "Short the Ponzi." You're not a fan of the Nasdaq, right? Garbage index with indebted tech startups that have never turned a profit. You're not wrong. I don't know if it's a garbage index, but I can't trade it. It gives me heart palpitations. Delta divergence. Hey, Fred, how are you? Made gold sound interesting. It's always been interesting. It's a different paradigm with it now because the cryptos are offering a new way to store value. All right, so I'm gonna get through all of these things, and call this a forecast. I'm looking forward to seeing everybody on group coaching again. I'm going to be asking a couple of you to be able to speak up and say hello. I want to check the function of Zoom for another project we're working on, and we're thinking about calling that "Make Hogue Money." Fred knows what I'm talking about. The natural gas, Fred. I'm looking at your last question here. It does seem to create gaps frequently. We've seen several island tops, island bottoms, several gaps. It's a volatile market that way. Rusty, NQ is all I trade. That's okay. It's not for everyone, and hopefully you're going to find great success in it. Speaking of that, let's remain humble, grateful, and creative in our trading today. Take your deep breath. I'll see you in the proverbial trading pit here in just a few minutes. I'll see you at 1 o'clock for group coaching. I'll see you at 3 o'clock for the market recap. And until then, stay good, stay clean, be kind, say a prayer for world peace, please. 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 Get out there and profit today. Trade well.